What's up, family? It's your boy Josao here again with another banger video as always. So you guys requested I try to make a video about Profirm. So in this video, I'm going to teach you all the basics that you need to know as a beginner, all right, before purchasing a Profirm account. The reason for doing this video is like a lot of people have getting scammed and all that. So I just want to clear the air, all right? You are going to understand the basic terminologies that you need to understand. Sometimes it's not about the Profirm company and all. It's about like you not knowing what is required of you, all right, from the Profirm talent. That's why you fail most of your talent. It's not about the strategy. It's not about your trading plan. It's because you fail to meet what the criteria that is being set by this Profirm company. So if you stay with me till the end of this video, you are going to learn all the basics, all right, as a beginner when it comes to Profirm, and we are going to smash this. This is going to be episode 1 in the Profirm playlist, okay? I'm going to be coming up with what more videos when it comes to Profirm, how to pass a Profirm challenge, and a whole lot more. Show the boy some love. Show the boy some love. Click that subscribe button. Drop 100 in the comment section, and you just do anything. If you want, you can just say thank you. You can even just say thank you in the comment section. Or without wasting time, let me take you to the back end of my computer screen and share this stuff with you. Let's do this.
So farm, let's start with the definition of what a pro farm. Okay, so a pro farm is a company that provides for traders with access to capital. So let's say now you are done with what you now know how to trade. Okay, whether you are trading crypto, you are trading forex, and all. Like these are companies that basically what provides for traders. Okay, you basically have the skill. They are going to provide you with what capital, and in return, they are going to ask what for percentage. All right, in the profit they give you money to trade, and at the end of the day, then they ask for what? Like profit in return. You split the profit. They might say you take what 80%, they take the 20% or so. There are numbers of ways that a pro firm can help you become what a better trader. One of the most important thing is like what a pro firm can do is what to provide you access with capital. You and I know like it is difficult like with this your $10, okay? With your $10, $20, $30 for you to what buy your Lamborghini, for you to basically live the dream your dream life which you want. So this pro farm company can give you what like what $5,000, all right, can give you what $10,000, can give you $50,000, can give you $100,000. All you need to do is like what you need to prove to them that you have the skill. So this basically is what we mean by what a pro farm. Okay, a pro farm is just like what a company which provides what cash or fund for traders, all right, that possesses what the skill. There are a lot of benefits in that comes when you are trading with what a pro farm. The first one is about access to capital. You and I know it is what very difficult to get what fund, right? More especially for my subscribers that are in Africa. $10 in Africa is a whole lot of cash, be it in naira, in leons, in South Africa rand or whatever currency. So it is difficult. So the company basically what provides you with what capital. The second benefit is what training and education. Profile company basically what they have workshop, all right. They have like what training tutorials, all right, in order for you to basically what make what a lot of cash. They are not going to just give you cash to just trade like that. They have like series of stuff which they are going to do to groom you so you are what completely fit to go trade their funds. And also again, the third benefit is what support and mentorship. So they mentor you, they give you what all the support that are required. The most important thing here is also what risk management. Okay, they help you to what manage your risk. How do they help you? They are going to give you like what the rules which you must follow. All right, they are going to what give you rules which you must follow. At the end of the day, that is going to help you in your profile, and it's also going to help you in your general life, kind of like what discipline, and even with your personal account. And the last benefit here is what? Technology. Both farm companies basically have what? Good technology, recent modern technology, which they basically use. Alright, sometimes like this other brokers are not going to have short kind of what technology. So if you are with a good pro farm company, then definitely you're going to have access to all those stuff. Alright, guys, so let's proceed. The types of what pro farm. There are basically two categories or two types of pro farm. We have what physical pro farms. These are what physical trading floors where traders can work together. All right, you need to go what physically, and you just meet them, and you basically what trade and all. All right, you meet to the contract and you come to an agreement at the end of the day. then they hand over what your account. This usually provide more direct oversight and training. While the second one is what? Remote pro farm, which means you can stay in what? Wherever you are in the world, whether you're in Africa, you're in Asia, you're in Europe, you're in America, wherever you are, you apply for these pro farms and you're just going to what? Do the needful, you meet the criteria that the standard that has been set by what this particular companies, and you are good to go.
Alright guys, sorry about the break. Let me just tell you about something very important. I'm currently running 1 month mentorship for crypto, forex and synthetic indices. If you are interested, the cost is just $50. Just send me a message by Instagram or Facebook at Joseph Say Concept, okay? My accounts are verified. Apart from Instagram and Facebook, there is no other way which you can basically reach out to me. Let's jump back into the
Started with a pro farm. Okay, now you know what a pro farm is. We know the benefits of a pro farm, why you need a pro farm, and like how to now get started with what pro farm. You need to know. Let's say I'm a beginner, all right, and I want to start with what a pro farm. First is what application process. If you basically want to have a pro farm account, traders typically need to apply to join a pro farm company. The application may include like your trading history, strategy outline, and sometimes a trading challenge. So mostly now what you are going to focus before this time you have all this trading history and all. But now this pro farm companies focus on what? Trading challenge. What is this trading challenge? This is basically where you have to what? Show them, all right? You have to show them like you have the skill. They are going to give you like what? A demo account. A demo account is what? A fake account with what? Fake money. For example, let's say they give you what? 5,000, all right? $5,000. They are going to tell you, okay, take this $5,000 to what? $6,000. Okay? So you just need to make what? 1,000 what dollar profit. So this is kind of like challenge. If you are able to take this $5,000 to what? $6,000, then you have what passed the challenge. There is more into this one which we are going to talk about in upcoming slides. Okay, so now after you have sent in application process, the next thing which you need to pay attention to is what? The trading challenge, or which is normally called the test. Okay, just like you are going to school at the end of the semester, you have to take what? Your exam. All right, for the teacher or lecturers to basically like what? Like know whether you comprehend or you understand what the concept that was taught to you previously. So many firms require traders to pass a trading challenge or evaluation to prove their skill before providing capital. They are not going to automatically give you what? Capital to trade. You need to show them, all right? You need to prove to them like you basically have what? This skill. So sometimes this challenge come in two level. They are going to say they have phase one, they have what? Phase two, depending on what the profile company which you are making. They will tell you like, okay, let's say you have a capital of what? 5K, that is $5,000 as an example. They are going to tell you phase one, you need to what? Make 8%. Okay, 8%, you can calculate 8%. Let's say 8% of 5K. Let's say this is what? $400. And the second one, they will say you make what? 5%. Okay, the second phase, they will say what? You make what? 5%. So this 5%, let's say 250. So in total, both phase one and phase two, you are supposed to make total of what? $650 to pass phase one and phase two, which means you are proving to them, all right, that you now have the skill. And at the end of the day, they are going to give you what? The real 5K account to basically what? Trade. And after you have passed this what and challenging phase or test, they are now going to what? Account funding. Once accepted, the traders receive a funded account with the farm capital and start trading according to the farm rules. So you need to abide by what? The rules. We are going to talk about the rules. This is like where most beginners, all right, or intermediate traders or even professional traders tend to what? Make mistake, because each different program have a different set of rules. You need to abide by the rules. Just like you are going to your high school, you are going to university, there are what? Rules and regulations which you must abide to. Right? You must not disrespect the teacher, you must always be punctual, you must not come late. So this program companies basically have what? Set of rules which you must basically follow. Hope you guys are grabbing the concept. Okay, so just three phases. You apply, after apply, they give you the challenge. When you are going to apply, you are going to pay depending on the account size you want. It's not going to be free. All right. For example, 5K account can be what? $32 an example. So when you pay the $32, you just come to what? For you to get a 5K account, then after paying the $32 an example, you come to what? The challenge phase. When you pass the challenge phase, then they provide you what? The fund. So these are the basically what three categories which you need to do to get what and start trading pro farm. So profit sharing. Now you might be asking like, if I'm going to start trading, all right, I'll use this one, which is the minimum one for most profile. All right, $5,000. Okay, $5,000. Okay, so now let's say basically now you have purchased this $5,000. We have what we call profit sharing. How much are you going to get from the profit? Let's say now this $5,000, you basically have what? You basically may, let's say for example, $100 out of this one. Okay, so out of this $100, depending on the profile, you can make from what 50 to 80%. Some can even go up to what 90%, which means out of what this $100, you are going to have like what $80. Okay, the $80 is going to be yours, and the remaining $20 is going to be that of what the profile, not from this capital, but what from your profit. Okay, from your profit is where you are going to get what 50 to 80%. Some companies basically give you up to what 90%. So which means out of this $100, you are going to have what $90, and the $10 is going to basically be for what this pro farm. Okay, then you must also know again about performance fee. All right, some firms charge performance fee or require traders to reach a profit target before withdrawing. So what do we mean? Now let's say now you have what this 5K account, this $5,000 account. After you have purchased this account, let's say you purchase this account for what $32. Okay, you purchase this account for $32. After you have purchased this account, then according to the rules of this pro farm, they are saying you what you must make what $1,000. Okay, you must be able to make $1,000 before ever you ask for what withdrawal. So which means even if you make what $900, okay, you make $900, you are not going to be able to withdraw until what you reach what $1,000. And according to the percentage, let's say you have what 90% of the profit, 90-10% split. So until but when you make $1,000, then you can be able to what withdraw what your $900, and they are going to keep what their $100. So different profile, different challenges basically have what different rules. Maybe the 5K challenge is going to be saying you withdraw what 1,000 when you reach 1,000. The 50K challenge is saying when you reach 20,000. The 100K challenge might say when you reach 50,000. So you just need to pay attention to all this. If you are finding value so far, ensure you subscribe, you like this video. If you have not liked, you share this video to others as well. Make sure you subscribe and turn on your bell, okay, notification, because I'll be doing more up videos like this on how to pass a profile challenge, and all this is just like the basic for you guys to understand. So when we start what trading profile account, it's going to be very easy for you. So let's talk about drawdown. This is where the problem is. If you are going to get a pro farm and you don't understand this, just know that you never pass a pro farm challenge. The mistake which beginners and intermediate traders make is like not understanding this basic terminologies, like what is drawdown. So what is drawdown? A drawdown in trading or and investing refers to what the decline in the value of what a portfolio account balance investment from its peak to its lowest point. For example, let's say now we have purchased what $5,000 account. Okay, $5,000 account. So now out of this $5,000, we are currently losing what $1,000. So this amount which you are losing is what we call drawdown. The amount which you are losing is what we call drawdown. Let's say you have what a 10K account, $10,000 account, okay, and you are currently losing what $3,000. So the $3,000 is what the drawdown. The drawdown is what the amount of cash which you are what you are losing from the main capital. What is the main capital? This is the 5,000, the main capital. The drawdown is what 1,000. The 10K is what the main capital. Okay, then the drawdown is what 3,000. So this is basically what we mean by drawdown. So now, as a beginner, you need to know about the types of what drawdown. There are basically two types of drawdown. Okay, we have two types. We have the balance-based drawdown and the equity-based drawdown. Guys, I'm the best in this game. Just smash the like button. Just smash the like. Just subscribe if you have not subscribed before I continue. Just take 2 seconds. Just smash this. Just drop something in the comment section. Something amazing, man. Like I'm giving you guys this idea all for totally free. I can't believe it. Let's smash the like button. All right, let's do it. Thanks for subscribing. Thanks for liking. So now let's talk about what balance based drawdown. Okay, so if you are basically going for a profile account, only go for profile account that what offers balance based drawdown. Okay, so let me explain this. Okay, what do we mean by balance based drawdown? Let's say we have a Profirm account, okay, of what? $5,000 again. Okay, we purchased this account for what? $32 or $20, $15, and so now this is the account, okay, which you have what? Purchased. Okay, you have basically purchased what? This 5K account. The next thing is now they are telling you what? The drawdown is like what? 10%. Okay, 10%. All right, this is what? 10%. Okay, so which means you can only lose 10% or out of this what? 5,000. This is the general drawdown. We'll talk about out of the entire account. This is what you are supposed to lose, 10%. And we have what we call daily drawdown. Let's say the daily drawdown is what? 3%. Okay, 3%. So now just pay attention. Let me just explain this. So now this $5,000, let's say now you enter a trade, okay, with this 5K account, and now you are making what? And let's say you what? A profit of what? $1,000. So now your entire account, this is no longer 5,000. You purchased $5,000 account, but this account now is what? Not $5,000. So when you close the trade, now 5,000 plus what? This profit, this P is what? For profit. So 5,000 plus 1,000 is going to be 6,000. So now, in case you want to lose money, okay, let's say 3% of what? 5,000. Let's say 3% of 5,000 as an example. This is wrong. Let's just say this is for $300. Okay, so which means every day your daily drawdown, if you are going to lose, you are only allowed to lose what? Out of this 5,000, $300. You are only allowed to lose what? 3% of what? $5,000 as an example. Let's say it's $300. So if you open a trade, all right, you open any trade and all, does that as soon as you start losing, which means now you can lose, like the account is going to remain what? 4,700. So as soon as the account reaches what? 4,700, they are going to close your account for that particular day until the next day before you can open a trade. Until the next day before what? You open what? A trade. Okay? So this is what? 3% of what? 300. But now let's say you enter a trade and you have made profit of what? 1,000. Now they are not going to take 3% of what? 3% of what? 5,000. They are now going to take 3% of what? Your new account balance, which is going to be 6,000. So let's say Monday, we open trade by Monday. Okay, like this. We open trade by Monday, and what? You basically want to have like what? 6,000. Okay, you made profit of 1,000. All right. So Tuesday again, when you return, you open a trade. Now you are going to only lose 3% of what? 6,000, no longer 5,000. The more you increase your account, the more what? Time if free you amount of drawdown you are going to increase. So when the account was $5,000, the 3% of $5,000 is what? $300. Okay. So now let's say now your account size is what? 6,000. So what? Your daily drawdown is going to increase. Your daily drawdown is going to increase to what? $400. Okay? To what? $400. So now you see, because of what? Now your account size is no longer 5,000. Your account size is now 6,000. So what? Your balance, what? Your drawdown has increased. So which means you can lose up to what? 4,000, $400. Okay? Up to $400. So which means now your account balance, what? If even if you start losing, the balance should be what? 4,600 instead of what? 4,700, because 3% of what? And $5,000 is what? 4,700. But now 3% of what? $6,000. This is what? The new account balance. Hope you guys are grabbing this. So this is what we mean by what? Balance based drawdown. The drawdown is calculated on what? The what? Recent account balance. Whenever you make profit, that's what is going to be calculated on. Okay, that's what is going to be calculated on. So let's say now you enter a trade, and all of a sudden the trade is what? Like you entered a trade, and the trade is basically, for example, like this. This is the 5K account. Now the 5K is what? 10K. Okay, so the 3% is still going to be out of what? This 10K, no longer out of what? This 5K. Because as you are going, the more profit you are making, the more you increase your account, the more what? Your drawdown is going to increase. So let's say yeah was 300, the 3% was 300. So now yeah for the 10K is going to be what? 1,000. So you can lose what? Up to 1,000 a day. Hope you're understanding. So that's why you need to go for what? Balance based drawdown. But the equity based drawdown is very challenging. It's very what? Difficult. Don't go for a profile with that is providing you what? Equity based drawdown. Like equity based drawdown. Okay, so what does this basically mean? If you have purchased an account, okay, you have purchased 5k account, and they say the drawdown is what, 3%. Okay, it's 3%. Even if you make what, $1,000, your total account balance now is what, $6,000. The drawdown is still going to be considered with what, the initial account balance. Even if you take this account to what, $10,000, the 3%, which is like for example $300, so you are only allowed to lose what, $300 a day. Even if like the account, what, you take this $5,000 to $10,000, the 3% is still going to what, be focused on what, the initial account size which you purchase. So that's basically what we mean by what, balance based drawdown and what, equity based drawdown. Hope you guys are grabbing the concept. All right, so let's continue. So types of drawdown, we have what, daily drawdown, which I've explained about. Daily drawdown is what, the amount of money which you are allowed to lose for a day when you purchase what, a Profirm account. So let's say out of this 5k, you are only allowed to lose what, $250 a day. So as soon as you open a trade, all right, you open a trade, and at the end of the day, your drawdown, your account is negative 250, then they are going to close this account for the day. So like drawdown basically helps you with risk management, so you basically know how much you are going to risk per trade. Otherwise, when you open big lot sizes, then at the end of the day, let's say you open like one standard lot with gold, and then the market just drop. Okay, so as soon as what, you reach 250, negative 250, then they are going to what, close this account, all right, until the next day again. Hope you understand. So these are what the important performance monitoring. Daily drawdown helps you traders to access short-term risk and impact. Okay, so this is what we mean by daily drawdown. Let's see this example for a daily drawdown. Suppose you start with an account size of what, 10,000. Let's say you purchase an account with 10,000. All right. During the day, your account rises in value from 10,000 to 10,500. Okay. Then sorry, at the end of the day, they are but by the end of the day, it drops to what, 9,800. Okay, it drops to what, 9,800. The daily drawdown is what, $700. Okay, $700 or 7% of the peak. Okay, so which means you have dropped what, $700 or 7% of what, your $10,000. Okay, so hope you are understanding this. Then we have what, general drawdown. General drawdown is what, the total account out of this $5,000. Even if you are going to trade for 5 months, you are going to trade for 6 months, you should not lose up to that particular amount. Sometimes they say what, 10%. Okay, so 10% of what, $5,000 is going to be $500. So even if you are losing, you are trading this account what, up to 1 year, 2 year, and all, you must not lose up to what, $500. Let's say the first day, Monday, you lose what, like you lose $50. The next day you lose what, $50. The next day you made what, $100. Then the next day you lose 250 and all. When you are losing from January to December of whatever, Monday to Friday, you must not lose up to $500. An example. This is what we mean by general drawdown. So general drawdown, often referred to as well the maximum drawdown, is the largest decline in the account. Okay, the daily drawdown is what you are allowed to lose for the day and they will close. But when you basically reach your general drawdown, which means you have failed the challenge. If they say you must not lose up to $500 and you basically lose up to $500, then at the end of the day, you have lost the challenge. Okay, so this is the important long-term risk assessment strategy evaluation as well. For example, suppose over a period of 3 months, okay, let's say January, February, March, your account peak was what, you purchased the account at what, $20,000. During this peak, your account drops to what, $14,000. Okay, so the maximum drawdown is what, $6,000. Okay, and let's say now they are telling you you must not lose up to 30% of your account. So as soon as you reach this $6,000, which means you have failed what, this challenge, except you have to what, purchase another challenge again, you have failed what, this challenge. Okay, so in summary, guys, we say a profile is what, a company, all right, that what provide what, funds for what, traders. Okay, for traders that basically have what, the skill, but they don't have what, the cash or the fund. Okay, we have basically two types of what, drawdown. We have daily drawdown and we have general drawdown. The daily drawdown is what, the amount or percentage which you are allowed to lose in what, the Profirm challenge. Let's say you purchase what, $5,000 account, and they only say the daily drawdown is what, 2% or 3%. So all you need to do is like what, deduct 2% or 3% of what, the total account, then you are going to basically know. General drawdown is what? The total amount, whether you are going to trade the account from January to December, you must not lose up to that particular percentage which the company is giving. Okay? Then we talk about drawdown profit sharing depending on the company. Some companies give you up to what 90%. Okay, they give you up to what 90%. So if you want to start Profirm account, basically it's what your application, your trading talent test, and account funding. You might be asking which Profirm am I recommending? Ensure you subscribe. Then I'll in upcoming tutorials I'll recommend some Profirms to you which you can basically just go ahead, okay? But ensure to always do your own personal research, okay? If you basically want to join again our personal mentorship as we have seen previously, send a message to Joseph Say Concept Instagram or Facebook, all right? And we are going to get back to you as soon as possible. Thanks guys for watching this video. Hope you find value in this video. If you have any question, ensure you just like drop them in the comment section. See you in upcoming tutorials. Peace. I'm Josao from Sierra Leone, West Africa.